Hello, and welcome to the October market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. September was actually a pretty good month for markets. U.S. markets were generally up, although they pulled back a bit from much stronger gains at mid-month. Tech took a hit in particular and closed the month with the weakest of the sectors. International was up, EM was up. In fact, pretty much everything was up at least a bit, except for bonds, and they pulled back a bit as interest rates moved up just a bit. Now, this is kind of surprising that we saw this kind of fairly strong performance given everything that happened during the month. There was a drone strike on the Saudi oil complex that took out about half of production. Historically, that would have rocked markets, but this time it didn't. We have the trade war that's ongoing, but at the same time, it doesn't seem to be getting worse. And that's positive. We have Brexit, which just seems to keep moving along, but again, no disasters. And at the end of the month, we had impeachment drop on the markets. And that's something that, again, could be expected to rock markets, but it didn't. And the question we have to ask ourselves here is why? Well, the bottom line is the fundamentals of the economy are holding up, and even in many cases, improving. We see housing improving. That's been weak for several months now, but in fact, now we see sales going up, both new and existing homes. We see construction rising. We see sentiment in the industry up, and all of this is a very positive factor for the economy as a whole. Not only that, we see strong personal income growth, which is leading to strong retail sales growth. People have money and they're spending it, and with consumer spending over 2/3 of the economy, that's very strongly additive for growth as a whole. But it's not just the consumer. We saw a rebound in service sector confidence. We saw a rebound in manufacturing output. When you look at all of this, we actually see a bunch of fairly positive factors, and that's only going to be reinforced by the Fed's rate cut this month. Now, that's not to say we're out of the woods. The risks have not gone away. Impeachment is very likely to rattle markets going forward. We have the election coming. On the economic side, we have job growth, which seems to be slowing down. It's still healthy, but it is slowing down, and that actually may have rattled confidence, along with the news from the political front. In other words, we do see some headwinds coming in, but at the same time, this is kind of where we were at the start of last month. Yes, there's a lot to worry about, but the fundamentals remain solid. And that's likely what's going to dominate over the next month. Yes, things do seem to be slowing, but they are still growing, and that's important. Yes, we're going to see more news drop on the markets, and we're very likely to see more volatility, but we're going to have the same kind of fairly strong fundamentals cushioning that volatility, just as we've seen this month and indeed in the month before. So that's it for this month. Join us in November for the next video, but until then, if you're interested in this stuff, be sure to check out my daily blog, The Independent Market Observer. Thanks for watching.